Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 15, 2023. Stocks declined on Thursday as the Federal Reserve's hawkish stance and weak economic data from China dampened investor sentiment. U.S. benchmark futures slipped after Chairman Jerome Powell signaled that further interest rate hikes were likely this year. The Nasdaq 100, which had seen a significant increase of 37% in 2023, was expected to trim its gains. Global miners Anglo American plc and Rio Tinto plc also suffered losses due to softening Chinese economic activity in May. In Europe, technology stocks lagged behind in the Stoxx 600 index as investors prepared for the European Central Bank's policy announcement to combat inflation. On another note, concerns about European gas supplies resurfaced as the Netherlands announced the closure of the region's largest gas site, leading to a spike in natural gas prices. After the Federal Reserve dampened hopes of imminent rate cuts, attention turned to the upcoming update from the European Central Bank, ECB. The ECB was expected to raise its deposit rate by a quarter point to 3.5% and address measures to tackle inflation, which remained well above the 2% target. Investors speculated that the ECB would not want to fall too far behind the Fed in terms of monetary policy. The dollar saw its first increase in 3 days as traders evaluated the possibility of further rate hikes in the United States. Treasury yields also climbed. In corporate news, SoftwareOne Holding AG experienced a surge of up to 21% following an offer by Bain Capital to take the Swiss IT services provider private for approximately $3.2 billion. Nikola Corporation, an electric truck maker, extended its rally for the seventh consecutive session in U.S. pre-market trading, while Tesla Incorporated was poised to continue its losses after ending its record-setting 13-session streak of gains. Deutsche Bank AG faced significant declines among European banking stocks after issuing a warning that its trading revenue could drop by 20% this quarter. However, clothing retailers Hennes and Mauritz AB and ASOS plc rallied on improving prospects. In Asian markets, Chinese equities rose after the People's Bank of China cut a key lending rate, fueling speculation of further stimulus measures. This move also formed part of broader efforts to support real estate and domestic demand. However, concerns arose as data showed that retail sales in China moderated more than expected in May, adding to worries about further economic slowdown. Industrial production figures met consensus forecasts. The yen weakened to its lowest level since November, driven by selling pressure. However, Japanese Chief Cabinet Secretary Hirokazu Matsuno warned against excessive currency movements. In the commodities market, gold experienced its longest losing streak since February, declining for the fifth consecutive day, as the outlook for additional tightening measures by the Federal Reserve diminished its appeal. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Turkish President Recep Tayyip Erdogan has stated that he would accept the recommendations of his newly appointed finance minister regarding interest rate policies. This suggests a potential return to raising rates in order to combat Turkey's high inflation, which reached 39.6% in May. Erdogan has a controversial belief that high interest rates cause inflation. France has expressed interest in enticing Elon Musk to build a Tesla gigafactory in the country, according to Jean-Noël Barrot, France's digital minister. Barrot referred to Musk as a great inventor, although he may not consider Musk's Twitter activity as one of his successes. Last month, Barrot threatened to ban Twitter in the EU. The Federal Reserve, as widely anticipated, left interest rates unchanged. However, the updated dot plot, which indicates Fed members' projections of future rates, implies 2 more rate hikes, bringing rates to 5.6% by the end of the year. While the S&P 500 ended nearly flat, the Dow Jones Industrial Average declined by 0.68%, and the Nasdaq Composite rose by 0.4%. In Asia-Pacific markets, rate shocks had little impact, and most markets saw gains. Japan's Nikkei 225 increased by 0.4% as the country's exports rose by 0.6% year-over-year, surpassing expectations of a 0.8% slowdown. The People's Bank of China has lowered a key medium-term policy rate for the first time in 10 months, following a rate cut to its short-term loan rate earlier in the week. The central bank aims to stimulate China's slowing economy, which has recently shown disappointing economic data, including a spike in the youth unemployment rate to 20.8% in May. New Zealand's GDP contracted by 0.1% in the first quarter, following a 0.7% decline in the fourth quarter of the previous year, revised numbers. This marks 2 consecutive quarters of contraction, pushing the country into a technical recession. CEO of Double Line Capital, Jeffrey Gundlach, warned that if the Fed continues with its expected rate hikes later this year, it could break something in the already fragile U.S. economy. Gundlach believes it would be wiser to apply the brakes on rate hikes due to several indicators that are showing signs of a recessionary environment. In summary, the Fed's decision to leave interest rates unchanged is seen as a hawkish pause. It is possible that the Fed may still raise rates later in the year, which has raised concerns among investors and economists who believe the tightening campaign might harm an already weakening economy. However, Fed Chair Jerome Powell indicated that if inflation continues to fall, the Fed may deviate from its projections and keep rates steady. The upcoming July meeting of the Federal Open Market Committee will be closely watched for any decisions made by the Fed. Despite the uncertainties, the resilience of the economy under 5% rate suggests that the markets may continue to thrive. Some of the main moves in markets. Stocks. S&P 500 futures fell 0.4% as of 6:41 a.m. New York time. Nasdaq 100 futures fell 0.7%. Futures on the Dow Jones Industrial Average fell 0.2%. The Stoxx Europe 600 fell 0.4%. The MSCI World Index was little changed. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro rose 0.1% to $1.0842. The British pound was little changed at $1.2660. The Japanese yen fell 0.7% to 141.13 per dollar. Cryptocurrencies. Bitcoin fell 0.3% to $24,863.24. Ether fell 0.3% to $1,633.68. Bonds. The yield on 10-year Treasuries advanced 3 basis points to 3.82%. Germany's 10-year yield advanced 5 basis points to 2.50%. Britain's 10-year yield advanced 3 basis points to 4.42%. Commodities. West Texas Intermediate crude rose 0.9% to $68.90 a barrel. Gold futures fell 1.2% to $1,945.60 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.